Hello everyone. Again, I mean, I just couldn't resist myself not to make a video on the upcoming CPI, just to point out the incredible strength in underlying flows that are currently going into the market. And I don't know, just poor thy lad who shorts the market, something like that. That is all well and good. And just to sum up how we are set up currently. Bitcoin, it has been approved if I'm not mistaken, right? The interesting thing that Ethereum moved much more than Bitcoin did in this announcement, but that is fine. Honestly, let's not talk about currencies right now. One thing to point out, what we did, we closed the SOFR short, the U24 SOFR short. We did close it. Whether it was a right decision or wrong, we will see tomorrow. But with what we did, we exchanged that. We closed the short. Our total risk on this trade was 0.2% of the NAV, and we found a better short in equity space and put it at 0.1% of the NAV because we are so bullish. Well, the market always knows better. The market always knows better, and especially going into these events, we can discern whether the market expects something or whether the market want to move in a certain direction after that. I vividly remember this day. It happened years ago, like in 2000. When was it? 2021. And I still remember this day as I've just traded it. This was the day when the CPI came in. Higher than expected. Much more higher than expected. much higher than expected. And a couple of days before, we've been saying that, holy smokes, this is a very interesting setup because we are pushing up against the trend resistance. If we break this is most likely going to be a major move higher, and this won't just be a shift into the positive trend territory, but we would have shifted into the positive tail. On this day, our signal shifted into the positive tail territory. It was within that week. And this is massive. I mean, shifts in tail signal in the dollar is the biggest thing you can get in macro. So yeah, I remember that day, and that was vividly, I mean, quite clear to us. Right now, it is, we think, based on what we see, the cumulative data we receive from currencies, from rates, from commodities, from stocks, from equities, overall from credit, points to the thing that either CPI tomorrow will completely annihilate equities, which is, well, unlikely. Everything can happen, obviously. We assign to it maybe 5 to 10% at this point. So very unlikely. This is not the base case scenario, but we are prepared for this with Tesla shorts. We outlined them, very asymmetric Tesla puts, and Netflix put spreads as well. And we will still be holding. Our model outcome for the CPI is the CPI comes in lower than expected. Great. We just continue going higher. CPI comes in line. I think if CPI comes in line, we think that it's not going to move the market that much, honestly. And stocks are not going to rip higher on it because we've already crossed all possible ATRs. We've already gone up so far before it. So I don't think there's much sense of doing anything or expecting an outsized move, because outsized move has just happened before the CPI. And there is always the chance that we are pushing so tight up into the upper boundaries of the probable range that if CPI surprises to the upside, not to say meaningfully, but let's say 3.5, holy smokes, stocks are gonna get crushed. In that, this is not the model outcome, but this can happen. The other thing to point out, so yes, we have trending longs on Nvidia, we have trending longs on Google, trending longs on Lilly, NVO, Marvel, CRWD, CrowdStrike, AMD, and we accepting the variance in price, whether the CPI comes in line or whatever. We are going to hold them anyway, unless CPI obviously comes in at 5%. We're probably going to close all of those. And that's it. We completely fine with those Tesla puts completely expiring worthless, and with Netflix puts as well. We think they're quite asymmetric anyway at their core. The interesting development is the behavior of Lilly, our biggest position. It has been our biggest. I just can't find it by scrolling down. This is what I wanted to point out. I'll come back. As you remember, this was the time when we've taken out the last liquidity right here. Let me change the color. Taking out the last liquidity, and this in and of itself is a very strong signal. Lilly is a beneficiary of one of the strongest thematic trends in the equity space right now, GLP-1 and the obesity trend, plus favorable environment, plus overall incredibly strong company. And the signal is, well, it's just like a cherry on top. Without the signal, we wouldn't entered it, and we entered this on this day, on the breakout, into the positive trend territory. After taking the last liquidity, we went big in it. We've already took some profits as we reached 620. We closed 25% of the position. We went really big in it. We closed 25%. We took the remaining 75% and we split it in half. And the half that we had, we sold and rolled essentially, and opened the 640, 660 March call spread. This is what we did. The price action is very favorable, looks very promising. Came into the cyclical all-time high. Well, came into the all-time high, created a base, generated high-frequency buy signal below the all-time high, and generally, so far, nothing to worry about. Looks like Lilly wants to break this area of interest. Whether the catalyst will be CPI, whether the catalyst will be anything else, or earnings, the break will be significant. This is what we set up. We've been set up, and so far looks very promising. Boeing, and in all honesty, we did not put the fiscal, neither did we put this fiscal basket, nor did we put the small cap value basket on. Just we lagged into the positions, but we didn't expect that much of a move higher in everything in equities. It just happened. What we did, we outlined this yesterday. We entered the NXC UEC as a longs, and UN as well. We did that, and generally this is it. Nothing in equity points to the fact that we might surprise to the downside, and it's points to the fact that CPI will have an outside impact on equities. To the contrary, it points to the fact that we might even continue going higher, and Nvidia is an absolute monster. Yes, and AMD and Marvel as well. We gotta find a way to add to Marvel position. So that is this is the update. Let's see what tomorrow's CPI and the Friday PPI brings to us, and if these 2015-2010 put spreads will expire worthless. It's January 19 put spread. If we're getting a very nice price action, and Tesla, by the way, if CPI comes in line and lower, and Tesla still underperforms and still will not gonna be able to break 241, which is the trade resistance currently. Even after that, after let's say SPX rips into the all-time highs, into 4,800, even if Tesla does that, continues to underperform, man, I don't know. We are gonna close those puts and probably roll them after the earnings, because the probability that if something bad really happens, if earnings really came, surprise to the downside, will be uninspiring, or anything else happens with beta, Tesla has a real potential just to completely flush down the toilet from here in a heartbeat. So this is the idea we're pondering right now. Apple looks tasty. Apple looks great. Once again, the closer we get, signal is still negative on the trend basis. The closer we get to the 188, if CPI helps that, we're probably going to be adding to the short right here. Amazon, great close. I'm going to close in half an hour. Great close in Meta, great close on Google. This is nothing, essentially. Nothing points to the fact that we've been discussing this, that there is a potential of this on these days. Before the beginning of the week, we've been discussing that there is real potential of creating a intermediate lower high right here and continuing lower into 4,600. No, this is no longer our model outcome, and whatever volatility CPI brings, we do not believe we even going to retest 48,683. So this is the idea. Okay, thank you for listening. Till tomorrow.